Thanks everyone for having me too. It's a real privilege to be here. I know lots of you have been practicing as well for a long time, and I think to get the most out of these sorts of sessions, it's really great if you've got conversations to add. We'll share and add that to this forum. So please feel free not only to ask questions as we're going through this afternoon's session, but also, as I mentioned, just to share your experiences. Because basically what I've collaborated this afternoon is kind of a set of experiences and different things that I've experimented with over time and that I've seen some results with. Also pulling together some of the noise, if you like, that's going on out there in the industry at the moment and trying to make sense of some of it, because I think we can hear conflicting stories about one particular aspect of managing our practices, etc. So please feel free to interact. So I think one of the challenges in our bookkeeping practices is finding clients, both new clients and also finding different reasons to interact with existing clients. Is that a fair statement, do you think? You will all be at different phases in the life cycle of your individual practice, and certainly over my career there's been times where I've wanted to have a busier practice and other times where I've needed it to be a little bit slower. And that's one of the magnificent things about this particular sort of business, because of the life cycle of the clients that we service. We do have the capacity to shape and shift what we get from our practices. So a lot of what I'm positioning today with you is about the psychology of not only your own approach to your own practice, but also to working with your clients. And one of the interesting things that I had a light bulb moment about several years ago was that we're in a small business ourselves and our clients are in small businesses. So a lot of the time the things that we're worrying about are probably similar, with just small differences dependent upon the industry that individual client is in. And it sounds so silly to point that out, but I found that interesting to keep that in the back of my mind when I'm thinking about my next career steps or the next direction for my business, is how that might actually work to provide those sorts of conversations to my clients as well. So in terms of finding clients, I think it's really important to take the time to understand your business, which in essence needs to be a bit of a reflection piece for yourself first. What do you want? Who is your ideal client? Does the ideal client operate in a particular industry? Or does the ideal client operate in a particular software? Or are you happy to service several different softwares? Maybe you enjoy startup businesses and all of that organising part at the front. Maybe you enjoy more the processing and the ongoing relationships. One of the attendees at our Melbourne conference yesterday came to me at the end and said, I really enjoyed thinking about where I'm at today, and she said, I'm in a downsizing cycle. I'm actually looking to lead the quieter life, but I still need to work a little bit, and I know that I love fixing up messes. So she loves getting the shoebox and she loves sorting it out and fixing it up and then handing it over. Not my cup of tea, but that's the whole point, isn't it? That we have the capacity to choose. And then knowing that I don't really enjoy shoebox jobs, but maybe my practice is good at processing and having an ongoing relationship, we might connect as bookkeeping collaborators and refer work within our networks. So just a positioning piece for you to think about, because we're talking quite a bit about networking today. Who's my ideal client? And what is the pain point of those clients? Because basically, with any sale that we make, there's a problem that requires a solution. And it's always the marketer's job to figure out what the problem is and how we're best going to solve that issue. So you need to think about the pain points that they have and which pain points you're willing and that you're enthusiastic and passionate about solving. And then, of course, how are you going to go about solving those problems? Are you the sort of bookkeeper who really loves going on site and wants to have that level of interaction with your client? Or do you love working at home in your PJs, servicing your clients online? Or is it a mix of the two? And if I am working remotely with my clients, how am I going to keep up that personal interaction? Are we going to make a coffee date and set up a Zoom or a Skype session at a particular point in time with the coffee and still have the face-to-face meeting? All of those sorts of things, and technology lets us do so much these days to really truly connect with our clients and share screens and still have that personal interaction. Again, this is all about how you want to solve those problems. But one thing for sure is we need to have a hook. And again, this could be with our existing clients or with new prospective clients, because I'm going to propose to you today that you could actually start offering more than what you currently offer your clients in terms of service provision, and start different conversations that will deliver great outcomes and real value to your clients that actually earn you more revenue without having to work harder. Does that sound like utopia? So the hook conversation can be, as I said, either the new prospective person inquiring with you, or it may be with an existing client. And we're going to look at a few different scenarios today that I've experienced. So this, and I'm sharing quite a few resources with you today, some checklists and templates and so on. So after the roadshows are completed, you'll be getting access to a digital show bag that has all of these resources in them that you can pick up and have a play with if you want to. So this is an extract of an Excel workbook that we use. And in this case, you can just see we're reconciling the control accounts for GST purposes. And the reason I've just picked this little one, and there's a few of them that I'm going to show you today that are conversation starters. This was one that I utilised back in the early 2000s, around 2006 I think it was, and I did a mailbox, like a PO box drop, when they used to be things that people used. And you're able to pay for the distribution of a flyer to a certain number of PO boxes. And the offer was, we will do a free data file health check. So anyone wanting to pick up on that just sent us through their financials, and it takes 15 minutes to populate this sort of a spreadsheet. That you can see is the GST reporting there. This had payroll and superannuation and so on it as well. So very, very simple. And then I get to go back to the client and say, we have a problem with your GST. So you could actually be overpaying GST to the tax office or potentially even underpaying. Do you want our assistance to help you clean this up? And our solution could have been that we cleared up the balance sheet today so that moving forward we had reliable measures, or they could engage us to look backwards retrospectively and pick up what the issues were that created these problems. But prior to that, these business owners thought that they were printing out the activity-like statement from the software, which was definitely accurate because it came from the software, and they had no problems. So this was amazingly successful. We probably would have had like a 95% hit rate where we found issues that we were engaged to do one of those two cleanup actions. Now, of course, we wouldn't use PO boxes probably today because not many businesses still really heavily engage with that sort of distribution. But Facebook is a medium that I've used, and there's certainly many social media forums that you could achieve the same types of outcomes, but I'm sharing my Facebook experience with you because that's what I know. So how many of you have a Facebook page for your practice? So a few. So does anyone mind volunteering to me an estimate of the amount of time, just to share with the group, of how long it took you to set it up? Few minutes, absolutely. I'm pretty confident I would have gotten change out of 15 minutes, including finding a pretty photo to put as the profile picture for the actual page. So we're not talking about a massive investment in time if you want to experiment with it. I guess more time consuming is actually putting up meaningful posts, because you want to engage anyone who likes your page, and you of course encourage your clients and say, I'm going to be sharing with you important information on our Facebook page about what's up and coming. So whilst we'll be taking care of it for you, this is just going to help keep all of these important items on your radar. And then of course you can put all your call to actions on there as well. So not only would you have your friends, clients and anyone else on the page and receiving your posts and feeds, you can actually boost posts. So when you put up something good, maybe today you'd go home and you'd write a little bit of an article about single touch payroll and say, guess what guys, this is coming, and this is the rough overview, and here are your deadlines. We'll need to be in touch with each other to make sure that we're ready to go and that our software is where it needs to be by that time, bless you. So you put together articles like that, and then you can actually pay to boost these posts. And I know that the figures are small and hard to see. This is just one example. Again, I've written the article, which might take me 30 minutes to put together the article. I even steal a lot of stuff. So you know how we get the ATO newsletter, the Small Business Newsroom, business.gov.au, subscribe to Fair Work Ombudsman newsletter, and you'll get a lot of fodder given to you that you can provide links to those external resources. I always like to write my own little spiel as well, because obviously once they click the link they're leaving you anyway, but as their trusted advisor, you giving a positioning statement is quite powerful. So take some time to write a little bit on it, but in terms of ideas about what that content should be, subscribe your little heart out to all of the relevant newsletters. Anyway, so we've got the post going, and then when I'm in my my business Facebook page and I've written the post, I can click a little button that says boost. I can click the demographic of who I would like my Facebook post to be boosted out to. So that includes things like geographical region, age demographic, sex demographic, the whole range of sorters, people who like other things that are similar to what your group or your Facebook page does. And in this instance, there's a little click down arrow here where I decide how much I want to spend. And of course, how much I spend will dictate how far and wide this gets pushed out beyond my normal circles. So my friends and the people that like my page already. So in this case, we spent 13 Aussie dollars, and that was going to boost from up to 2,200 people. So from 840 guaranteed up to maybe a potential of 2,200 with the budget spend and the demographic that I had nominated. So for a small time investment and maybe a campaign like that data file health check type activity, not a bad little way to get your message out there. And we want to experiment in small chunks, because, as I said, in my experience, there was quite a heavy uptake on the offer of the free health check. So that's just food for thought. Anyone doing that sort of thing in terms of paying for Facebook page boosts? Yeah. How did you find? Was it successful?
I've seen a few Facebook likes and activities going on that time, meet with clients.
Yeah, okay. Yeah. Did you have a good hook? So I'm not sure how much we've talked about the recent change in relationship with IPA and AAT. Did Janet talk a little bit about that this morning, or Daryl? Yep. So as far as I'm concerned, I see amazing opportunities for AAT members moving forward, because AAT and IPA will be working collaboratively on creating opportunities for you to connect with tax agents in the space. And what an amazing outcome for everybody, mutual referrals between the tax agent and the BAS agent, bookkeeper, getting agreements in place that will help you with as well, so that your client base is protected, as is the tax agent's client base. And an amazing outcome for the small businesses, because they have end-to-end solutions for their BAS and day-to-day requirements, and then as well as their other compliance requirements that we need the tax agent for. So I think I see huge potential there in terms of really leveraging the very unique position that IPA and AAT have in Australia in terms of professional associations. So watch this space, because we are talking a lot about the ways forward around that sort of thing. So in my experience, networking has been absolutely mission critical. And it's not only about getting ideas about things, which, we have great stories going on in our own heads, but sometimes when you talk about it with somebody else, the brainstorming factor can just create, take it to the next level. So for me, the networking has always brought about that in a business that is otherwise quite autonomous. Even if you have employees, sometimes talking with someone else who's in practice by themselves is just very uniquely not only rewarding but productive. So networks from that perspective, and as I said before, networks from the perspective of maybe you're really good at doing the rescue jobs, and I might be really good at setting up products like Workflow Max or Receipt Bank, those other productivity type tools that you might not, we can't be experts in everything. So finding the person that can help you set the client up with that in the first instance, so that you can focus on what you're good at doing. I also had an AAT member in Sydney when I was saying about going on holiday, that she can't go on a holiday because there's always stuff to do. There's always payroll. There's always things that she can't get away from. So wherever she goes, the laptop goes, and there has to be internet connection. And that's really unfortunate. Janet was talking this morning about mental health. It's not good, is it? If you can't ever get away from your day-to-day, that's going to chip away. It's only sustainable for so long, and it's not good for your practice. So potentially either engaging with that tax agent where you can help each other out with things like that, or striking up a relationship with another bookkeeper who can help you out with the bare basics so you can have that downtime from time to time, I think is mission critical. And there's some great discussion forums here in Melbourne. Is anyone going to those discussion forums, which are usually a dinner? No? So, eyes peeled, do you see the emails come out? Just don't have the time? Would you go if it was during the day?
It was more that they could do it on the same day. I can't do it one day. And that's always been, I'd love to go on Monday.
Okay. We might have to do some surveying around that to see how we can best kind of work it out. Would you come into the city? Okay.
There's nothing in the regional area, really Melbourne. Like the regional.
Yeah, that's right. And as I said, they are mostly focused in Melbourne. There's one, I think, is that right, Linda, in Sydney? Discussion group. So, sorry?
I'm from Sydney. It's
usually in Castle Hill.
Castle Hill, thank you.
I can't go, it's too far. Can't really do it.
Well, I think we would like to start working more on creating opportunities for AAT members.
After hours as well. It's too far.
Yep. So to be more flexible around that sort of thing. So yeah, watch this space. So starting the conversation. How many of you use a letter of engagement? That's pretty good, yep. And mission critical, and I think, and certainly the ATO is talking about this. Obviously the TPB don't make it compulsory, but they strongly suggest that you have a letter of engagement in place that helps protect you. Now unfortunately sometimes relationships go awry, don't they? And even the best of clients can become the worst of enemies. So the letter of engagement, helps. It's no he said, she said. It's in black and white about who's doing what and when, how we're communicating, who we have permission to talk to. And as we move more and more into the digital age, that's just going to be increasingly relevant, because if we're now making a representation to the Commissioner of Taxation every time you run a payroll, we're going to have to get the client's permission, etc., etc. So the engagement piece is really important. And I've had people say to me, oh, but Rochelle, I've had clients that I had for 15, 20 years. How the heck do I now sit down and say, I'm not sure that I trust you, so let's draw up a letter of engagement and change the way we've been doing things for so long. And I think that's where we can actually start saying, we're going to review where you're at. This is going to be not the health check from that template that I showed you, but we're going to just do a mini audit and have a look at our payroll and check whether or not we're registered appropriately, i.e. are we getting near payroll tax thresholds, or we're going to have a look at GST registrations. Is your cash registration still the most appropriate registration for your business, or are we approaching that kind of conversation? And that kind of opens the door to saying, okay, well, here's a few things that we've decided we need to do to clean up our act. And that flows through to the letter of engagement. So you can kind of gently position that. If you need to move older clients forward to that kind of relationship, they're my suggestions for breaking the ice on that conversation. And I've got some tools around that for you. But the letter of engagement is also a great opportunity for you to list all of your services. So even if that client isn't using your budgeting services or your management accounting analysis services, you've actually got them tabled there so that they can ask you if they're curious about what that next thing that you provide is. But as I said, it's also in black and white. Whenever I work with family businesses, and my background, I got into bookkeeping very accidentally. We had a family business, a construction business, and stacks of tradies associated with that business. And when GST came in 2000, all of our tradies came and said, Rochelle, what do we do? So that evolved into a bookkeeping practice. And a lot of those people, like my husband and I, were in mum and dad type businesses as well. So very quickly I learned that the letter of engagement had to be holistic. It wasn't just about my practice and this business, but it was also agreements within the business. Who's doing what and when are they doing it? Who's responsible for gathering the receipts, or and making sure there's real harmony. So there's a duty statement effectively written for everybody in the relationship, including each partner of the business. And that removed a lot of tension straight away because it was very, very clear from the get-go. And so everyone had very tangible, clear expectations. So one of the other tools that you'll get in your digital show bag is a new client details and requirements checklist. So it gathers some really standard information about the client. So this helps you in interview number 1 with a new client. giving the software, any passwords, anything relevant like that. But also goes on to, there's a huge checklist at the back of it that lists a lot of bookkeeping and admin style services that you may offer in your practice. So obviously you can tailor this to suit your practice needs and remove any of those tasks that I've added in there that aren't appropriate for you, or add some if there's other things that you can do. And it's literally, you can go through and electronically tick off what services that client is interested in talking to you about. As I've mentioned, it's also important from time to time, even with your existing clients, to have a review their registrations and make sure everything is what it should be. And to also review regularly, perhaps annually, our payroll setup. Because a lot of the time you might not actually be the processor of the pays, just the reviewer of the pays. So the onboarding of new employees is not always your responsibility, right? So are they gathering all of the right information? Do they hand out the Fair Work information statement and make sure they've got signed evidence in the employee's file that they've received that? Because do you know what, business owner? If you don't have a Fair Work information statement, if you haven't provided that to your employee, that can be a $54,000 fine per employee per incident. So, if you've got instances like that, just doing a regular review is really important. And I like to put together information pieces for the client so you don't have to repeat yourself with this conversation over and over again with your 10 clients. It's an information piece that says, this is what the issue is and this is what we can do about it. Would you like us to take care of it? So we mentioned the letter of engagement. So from time to time we might offer additional services, and a great example of that is single touch payroll. You're going to have to go out there and have conversations with any of your employer clients now to say, okay, what's going to be our plan of attack to get prepared for either July 1 next year or the year after. So that your letter of engagement is always going to be a work in progress document. So I actually create a folder where the initial letter of engagement goes, and then all of the other bits and pieces that happen over time where they might direct me to do one-off type extraordinary style tasks, I just populate that in there so that there's always an audit trail of what the business owner has directed us to do. So also, you may have inherited a chart of accounts from a previous bookkeeper or an accountant, and the data file setup also may be inherited. I always love to look at how the process is going and think, is this still the right thing? Are we still getting the management information that we need? Do we have the most efficient process in place in terms of gathering all of that detail? And I bring this up now because I find the chart of accounts a really important tool for organising the information that we want to analyse. So making sure that you are happy with that. Obviously the business owner does not understand that, do they? They don't understand what the chart of accounts means to them in terms of their financial reporting outcomes. So it would take you to give them the reasoning behind why we need to have a look at that. Also along the same lines is the use of the software functionalities. So there's new features coming out all of the time. Are we using those features to the best of their abilities? And there's also some really great oldie style functionalities within software, like time billing that we can bend and stretch to fit our needs. It's not always about payroll, is it? So inventory type management where we sell services based on that. So again, important just to stop and think and review. So another checklist that you'll get is the initial file review and compliance check that takes you through that journey of the things that I've mentioned, like Fair Work information statement. Do we need to be registered for payroll tax yet? Are our pay slips set up appropriately with the separate call-outs that are required for the individual awards? So with all of this in mind, we'll now start to have a bit of a conversation about value-based pricing. Have you heard that going around quite a bit in the industry lately? This value pricing, value packaging, yeah? I hear a lot of noise about it at the moment, and I've noticed that different people have different takes on it and have different opinions about how it could or should work. I think the view can be quite simplistic, because there are different ways you may apply the philosophies behind value pricing, but to my mind, there's one purpose for it, and that is to shift the psychology of the conversation that you have with a client, where they don't think about the cost. Cost is not part of the conversation. It's the outcome. It's the value that they get from it. So, for example, we're going to have a look at doing a cost-benefit analysis of technology and a technology review in a moment. And the net potential saving for this client is $4,000. So a value proposition would say, I'm not going to go to the client and say, can I do a technology review for you? It'll cost you $100. The psychological approach under the value pricing principles would be, can I do a technology analysis for you? I have a feeling I can save you $4,000. Very different conversations, aren't they? So for me, that's what value-based pricing aims to achieve. So think about it. If you're in the market for a refrigerator, you can walk into a white goods store and you can actually you can touch it, and people might think I'm a bit strange bonding with the actual fridge, but I'm able to get excited about the ice dispenser and picture myself as a little bit fancy pants on a Saturday. And it might even have features that I hadn't even thought about, like self-cleaning, but they're all there in my face and I can see them side by side. But when a prospective client rings you, what's probably one of the first things they say to you after, isn't Melbourne hot today? And why do you think they say, how much do you charge? Do they have a clue what you do? No, they've got no idea what you do. They've got no, they know they've got to bast you. They might know they've got a box of receipts that are fading in the back of the ute. And they might know at some point they're going to have to get their tax return done. But they actually have no idea what you do. And that's why they ask you how much you cost, because they don't know what to ask. So it's your job to twist that psychology around, accept that they don't know what else to ask you, and take them on the journey of understanding what you mean to their business. And actually, they can't do without you, because you're going to save them money, or you're going to give them back time, however the conversation goes. And you can start breaking that ice by using these sorts of tools to find out more about their business and say to them, well, first of all, we actually need to understand the business before I can let you know how we're going to solve the issues that you're facing. And then hopefully convert that conversation completely into a value proposition rather than what I'm costing. Now, when you get into this space, it definitely provides a huge amount of leveraging opportunity. So the obvious one for me to pick on would be Receipt Bank, because you've seen what they do today. And if it used to take me 3 hours to enter all of the transactions from a 5-page bank statement, then now I can use bank feeds and I can use Receipt Bank and scan all the things, and it might take me 30 minutes, right? So does the client actually really care whether that took me 30 minutes or 5 hours? The client wants the outcome that you're delivering. So that's where these leveraging opportunities start to present themselves, because you can then say, I'm going to prepare your BAS end to end, and I'm going to have a conversation with you about your financials, and it's going to cost you $110 a month, $220 a month, whatever it is. Client doesn't care how you achieve that, but now you're not losing time, because sometimes things that you feel like you can't charge for and so on. You're delivering an outcome. So that price leveraging is definitely there. So I can't stress enough that the client doesn't know what they don't know. So kind of part of our role is to gently take them on a journey, because we know so much that can help tell stories about their business and help improve not only the way they do things from an accounting perspective, but about the way they manage their business and make financial decisions about the limited economic resources that they have in their businesses. So keep that in mind. They actually don't know the amazing set of skills and knowledge that you have. They only know this surface level about these immediate pain points that they have. Now, I thought I'd share with you, apparently, and I'm no marketing psychologist, but Steve Jobs started introducing the choice of three concept. And apparently it's quite a successful marketing concept, because people like to think that they're maybe not buying the cheapest and they don't want the most expensive, but they're getting done what they need to do somewhere in the middle. So the psychology of three offerings is apparently quite a strong positioning point. Just if you're going to start dabbling in it, maybe experiment with that and see where your new clients sit. Just let you take your photo. Don't forget you are getting this slide deck. So value packaging wants to scrap the concept of hours altogether. So we're always converting the conversation back to, what are you getting? What is the value? How much am I saving you? How much more profit can you earn if we do this particular thing? And I'm going to talk a little bit more about that as well. Will it always work? I don't think so, because the sort of conversation that I had with the AAT member yesterday, where she said, oh, I love the rescue jobs, give me the shoebox. I love sorting out a mess. That's tough, isn't it, to say, I'll fix this problem for X dollars, because whilst you can use your scanner and receipt bank and all the rest of it, you're not sure the extent of the issues you're going to face until you start getting your hands pretty dirty. So there are possibly ways you can approach that, like, I'm going to do a review and it's going to cost you X to give you that time to figure out where things are at, and I will then quote you for the balance of the job. Or maybe in this instance, the best way to go is still hourly, but just food for thought. I've had a lot of colleagues, as I said, there's a lot of conversation about value pricing, and I've listened to quite a few people talk about it. And I've heard some people be very, very adamant that we should be scrapping timesheets, because that's restrictive, that holds you back, that's not what value pricing is all about. I kind of beg to differ a bit on that, in that in a service-based business, the time that we put in is our major cost of sales. So even if it's just from a management perspective, I reckon it's a pretty important one to have a handle on. So it might not form a major part of the value package or the value concept. I think it's still pretty important information to have. So to that end, I've done a bit of an analysis around what it costs you to just turn up, to just be who you are with all your skills and knowledge and all the things you need to have to be a bookkeeper and or a BAS agent. So to do that, we just have a think about costs and there are variable costs, and they're also known as direct costs or cost of goods sold, and those guys, they vary in direct proportion to sales, i.e. if I'm selling 80 hours of bookkeeping services, then I'm paying my employees 80 hours to work for me to produce that service. Okay, so that's a direct cost. Then there are fixed costs or overheads, and of course those costs don't care how many sales we make, they stay the same. And a great example of that would be rent. So it doesn't matter if I work 120 hours a week, still pay the same amount to my landlord. And there are also semi-variable costs that has a fixed component and a small, they are mostly like overheads or fixed costs, but they do have a small variant. So our break-even is a really important point to understand, and I'm giving you an Excel spreadsheet calculator to put your figures into that will give you your break-even point. And it's an important concept because, of course, as break-even suggests, it's where I've met my total costs with the level of sales that I have. And hopefully you will have included your take-home wages in those costs as well. But it represents the profit. You only start earning profit after you've hit the break-even point, which clearly we should all be in business to make a profit. Otherwise it might be easier to get an employed role somewhere, which is okay too. So let's have a look at the sorts of overhead expenses we may expect. You're getting an Excel spreadsheet to help you calculate your charge out rate as well. So all of this is in there for you. So we have things like our professional indemnity insurance that we have to have, our professional memberships, maybe conferences and other PDs that are also essential for us. We might be a member of a paying subscription to a software company. We need to create an allowance for our hardware and so on that we need to have in our businesses. So those sorts of things. So in this case, we're working with 4,240 just to work through one scenario with you. So if I took that $55 an hour charge out rate from a survey of average bookkeeper charge out rates. Is anyone else really hot? It's quite hot in here. Janet, do you mind checking if I'm not sure what to do.
25 on there. That's 30 now.
I'll get some conflicting to help us have.
Thank you. I was on heating, was it? No wonder. Thank you.
Yeah, cool. There you go. It's on cool. Yeah, it's on cool.
Thanks for that. So that 55 was this average charge out rate. So whatever you would input your rate there, of course. So for those overheads, that means I'm working 77 hours every year just to turn up. And that equates, if you take a working year to be 42 weeks, that equates to 1 3/4 hours every single week. Which, when I first did this, I found that a little bit of an eye-opener, to be honest. So we all are in practice for different reasons. We are at different stages, as I said, in the cycle of our practices. So the answers to these questions are going to be markedly different for each and every one of us. I know an MYOB certified consultant whose husband retired last year, and then now doing the grey nomad thing, and her office is a different coastal campsite every day. So she's changed the shape of her business and the sort of clients that she works with to suit what she wants to do at this stage in her life, which is fantastic. So how much do you want to work? And therefore, how much productive time do you really have? What's my desired income? And therefore, after I've done some calculations with all of those facts, how much do I need to charge to achieve all of that? So Available productive time is that time that really excites us because we get to bill for it. Now, if we work 52 weeks and we work 5 days every one of those 52 weeks, and again, that's going to be different for each and every one of you, then I take out public holidays and I take some annual leave, and this is where the person in Sydney said, we don't take annual leave. That means I've got a total of 230 days each year. And if I'm working 7.5 hours each of those days, then I have 1,725 hours in order to earn the money that I want to earn. But we've got lots of things to do in our business, haven't we? We've got to actually think. We've got to think about all the things we're discussing today. We've got to come up with some marketing strategies. We've got to think about buying Christmas presents for our clients. We've got to lodge our BAS. We've got to maybe do some travel, PD, phone calls, all that kind of stuff. So if you average that out, what do you come up with in your practice? So for argument's sake and for the purposes of just walking through one calculation together, let's say that that's 2 hours. That means I've now only got 5.5 hours left each day to actually earn the coin to keep me in the manner to which I've become accustomed. So that comes down to now to 1,265 available productive hours. So we need to be able to cover our overheads and make any loan repayments that I might have in the business and have return on investment. So say, for example, by that I mean if you put $10,000 into your business bank account to start up your practice, that didn't go off the mortgage, did it? So there's an opportunity cost there that you could have been saving, you know, whatever your mortgage rate is, of that $10,000 over whatever period of time it is you've invested that capital. So if you're really going to be honest about this calculation, then you'd be including a return on investment factor in there. Or if it was cash money that you don't have a mortgage on, you could perhaps have that in a term deposit earning interest. Okay, so that's the sort of concept there. That if we're doing a really good analysis of this, that's the sort of detail we'd go to. So I think it's also valuable to at least have an idea of what's available for me if I choose to go and be an employee, because clearly there's an opportunity cost associated with that. If I want to work in my business and I realise I can only earn $50,000, at least I'm making an educated choice that I'm not earning more money elsewhere. And I think that's absolutely fine, because you've made a choice then. At least it's an educated choice. No, it suits me to be in my bookkeeping practice because I've got the flexibility to work the hours I want to work, or to go and see the kids in their athletics carnival at school, or I've got the potential to grow things and become, you know, really hugely financially rewarded. All of those things. So as long as it's a decision. So under the Clerk's Private Sector Award, that's a rough pay scale which equates to roughly that. That's all entry level. But if you look at Seek, and I think this search was in Melbourne, for not an entry level but for an experienced, not a high level experience but a medium level experienced bookkeeper, not at the CFO level, you can expect to be able to pull in somewhere around 60 or 70k for a full-time role. And then you'd get super on top of that. So the net profit needs to cover, and in this example I've just said, well, let's make sure we're at least covering, if we're deciding to work full-time, that we're at least covering what we would earn in a full-time role. The little spreadsheet that you've got includes a link to a calculator, so you can calculate the income tax on that, because you don't have to pay your tax bill. And of course add in our overheads. Here you'd also need to include any return on investment or opportunity costs type of calculations that you may have included. We haven't here. So that means we need, the required profit is 76,387 to meet all of those things that we said we wanted to do. And remember, we had 1,265 productive hours possibly available to achieve that. So my charge out rate becomes just a little bit over $60 an hour. So I think that's a worthwhile thing to do, and so that even if the utopia doesn't exist that you get to charge that, at least you know that's what it costs you to be you. Okay, I think we're moving into, or we have been moving into for quite a few years now, where there's all this opportunity to deliver great outcomes to businesses, either within your practice or directly to the business, with efficiency tools. There's lots and lots and lots of efficiency tools out there to save time, to improve the way businesses take care of the holistic business process, not just their accounting function, everything, their document management, their collecting of timesheets from employees, their organising of the way projects are managed internally with products like Podio or Rike, things like that. So there's a whole raft. I had a friend who's just recently been to Boston for an international accounting showcase. And Xerocon here, has anyone been to Xerocon? Couple? So, you know, they have maybe somewhere in the order of 500 exhibitors maybe. But these sorts of international accounting expos have in excess of 3,000, 4,000 exhibitors. Point being, if we think we've got a lot of information now, there's still a lot of more information to be had. And therefore, I think we're going to continue to see, some people say, oh my goodness, why am I studying bookkeeping? Because it's going to become redundant. You told me that Receipt Bank automatically enters the receipts. Wow. Actually, you know what this is doing? It's creating a whole stack more opportunity for you, because it's getting more complicated, not less. And your clients want the delivery, they want the pain solved, they want to see their bottom line grow, and they want to have the best business process available. So therefore, understanding how to actually break down the components of those benefits and of those costs associated with those apps is becoming a really important skill for you to have. So I put together a tool for you, and we're going to step through it now to see how you would apply it in practice to help you measure up those costs versus those benefits. So basically the overview is that we'd come into a business and we'd have a look at what's happening in its existing state. So how are they currently managing the whole business process end to end? And I don't mean just the accounting, as I said, all of those other aspects of business management, staff management, etc. And then we reflect upon the technology that we know about and whether or not this business would actually have a need for some of the technologies that we know about to help improve those. And this is where I think your networks become invaluable, so that you can say in your Facebook group or in your discussion group or wherever it is that you connect with your colleagues, I've got a client doing X, Y, and Z in this industry. We've got this problem. Has anyone got any solutions for me? And you'll get a plethora of information given back to you. One of the things that I'd like to work with Janet on moving forward is starting the journey of putting together some resources for you where AAT's done some of the hard work in gathering the facts, the costs, the benefits, the pitfalls around these sorts of things, so that at least part of your work is done. So we identify the improvements that are potential, and then we need to look at the costs so that we can present those to the business owner so they can make a decision. So we do a cost-benefit analysis to help us arrive at that, which is where we break it all down and we take the tangibles that we know about. So Receipt Bank has a dollar price tag, doesn't it? We know about that cost. But there's also going to be some intangibles too that we need to put a dollar figure on, like staff training. We're not actually physically going to pay our staff extra to do the training, but there will be an opportunity cost when they're not being productive doing their normal jobs and things like that. So we need to make sure, to be realistic, we're gathering all of that information together. So the cost benefit analysis aims to convert all of that to the best guess costing that we can do. And in some instances that will be a bit of a guess, but better an educated guess than not analysed at all. So we need to firstly define the units of measurement, so of the cost and the benefits. So there might be, as I mentioned, it might be subscription fees that involve software. There'll be time maybe for you guys to set it up within the business. There might be other consultants that you have to pay. Then there's going to be the downtime for the staff whilst we implement. Then there's maybe going to be some training time, etc, etc, etc. And then I need to have a look at the benefits. Once we're all up and running, are the staff going to save time doing particular things? Are we going to save money because we're not employing other professionals on an ongoing basis to take care of this thing? Are there other intangible business benefits, which means like I'm freeing up this time, so what that means is I'm going to be able to go and connect with another 50 clients and improve business because I'm not wasting time over here doing this other thing that can be solved by a particular product. So that's got to be a bit of a brainstorming thing, because you're bringing the technical background, but your business owner definitely needs to be involved because they understand all of the implications within their business. So here's just an example using Receipt Bank, and we did an estimation of the amount of receipts that were being lost. And I mentioned I've got a background with quite a few tradies, so I'm not actually just being unnecessarily nasty. But any of you who have worked with tradies, you would appreciate that it's quite common to get faded receipts, to get receipts with a steel cap boot imprint on it that you can't read anymore, that's ripped, that the dog ate, that fell into God knows what on the work site, that never actually made it to you. And the only reason you know it exists because it's a line item on their credit card statement, yeah? So this happens. And again, remember this is only a best guess because the receipts I don't know about, I just don't know about. But I know how much how much cash he's saying he's going through from his wallet, and I know about the guys that I can see on the bank statement, but I can't claim the GST because I don't have the receipt. So we can have a best guess. So here's our costs, tangible and intangible, and including some training and so on, the subscription to the software, some estimate times around the consultant's time and the training, etc, etc. And here are the estimated benefits, and we estimated that we're losing about $50 per week in receipts over the working year. So and we estimated that an automated software would mean that we're not paying the bookkeeper for an hour's worth of work every week doing physical data entry, because now it's only scanning, and we're using a marriage of bank feeds and bank rules and receipt bank auto entry to get the transactions physically into the software. So that's a saving of $60 per week. So all up, we came up with costs of $1,090 and benefits of $5,060. So you then get to go to the business owner and say, not, do you want me to do a technology analysis and it'll cost you $150 or $200 or $400, you get to go to the business owner and say, would you like to save potentially up to $4,000? And that conversation with most of the clients I've met over my career would go down quite well, especially if I handed a beer with it too. So moving on to conversations that add value. So you go to all the great work of getting their compliance done, making sure it's accurate and the record keeping's where it should be, and you do all this fantastic work, and Maybe you provide the financials to the business owner, maybe you don't because they said, what are you giving me that for? But the financials actually tell some really important stories, don't they? About where the business is today, whether we've improved from the past, looking into the rear vision mirror. And also, there are some tools that help us project where we want to go and where we should go. So you've done all this great work to get it to here. Does your client earn any money by lodging the BAS? They avoid a fine and they avoid getting into trouble, but it doesn't actually earn them revenue. So the conversation where you say to the client, let's have a look at what your financials are telling us and whether or not we can start to chip away and tweak at this and make some changes to potentially improve the bottom line. So here's one example. This is a this year versus last year analysis. And in this case we saw, and I know you can't read it, so this is the last year column, $247,000 was total cost of goods sold. And our gross profit had gone from $284,000 to $440,000. Our cost of sales had only gone up $10,000 in the period. So we had a big improvement from 53 to 63% in our gross profit margin. Wow, that's some good work. That's fantastic. What did we do to achieve that? Let's have a conversation about what are the sorts of things that happened. Well, my commission on sales actually went down, so I had a cost saving, so that's driving my improvement in gross profit margin. That's fantastic. Could we do more of the same good stuff? Well, what are my next big expense items? Obviously, commission is my largest. Advertising, and all of these guys are advertising, is my next biggest cost driver in terms of cost of sales. And this business is in the real estate industry. So, okay, we're looking at all those, we're thinking about, and what we do know about advertising is it just keeps costing money. So the longer the property is listed, the more I'm paying, and I'm paying quite an amount in some of those forms of advertising to have that listed there. The longer the property is listed with me, I don't earn more commission because it's fixed commission. As in, the real estate agency doesn't earn more commission. Now I went to an industry benchmarking tool. As you can see, this one's ANZ. There's lots of them out there. A lot of the banks do their own. The ATO has some really basic benchmarking stuff for you to look at. ABS also. So this tells me that in the property services industry, gross profit margin sits about 96%. And if you remember, we were at 63%. So I get to say, we've still got room for a great deal of improvement to keep growing that bottom line. So this slide just shows you that you can actually calculate your gross profit margin on that website, but your accounting reports spit that out anyway, but that was just nice to know. So in terms of gross profit margin, at this stage, I just Googled what are the ways we can improve our gross profit margin? And basically it's either you increase your sales price or you control your costs. And this business didn't really have any room to move at all because their unique selling point was that they were a low commission percentage rate, and it was inclusive of all of their advertising and things like that. So clearly they can't change their selling price because they lose their unique selling point. So the only strategy that we could really fiddle with were the costs. So remember, we saw that the advertising was the next big ticket item after our commission on sales. And all of those agents, they had no consequence whether it took them 14 days to secure a sale or 4 months to secure a sale, because their commission was flat. So what we thought we'd experiment with in the next financial year is adjusting their commissions so that they had quite a ridiculously high commission paid to them within 14 days of sale, like if they sold within 14 days, and it gradually scaled down after that. And guess what? Our advertising costs in the next year actually went down quite, it didn't fall through the floor or anything, but it did cause us to add another $10,000 to the bottom line because the advertising costs were more controlled. So that's just one example of where it's a very simple conversation, but it adds a lot of value. And again, it's not, hey, this business owner's name is Stacey. Hey, Stace, I'm going to charge you $500 to have this conversation, which I had to have with her because she needs to tell me about the cost behaviours in her industry that she knows much better than I. So it was, do you want to see if we can save, $10,000, $15,000, add it to the bottom line? Okay, Shell, why not? So, and budgeting. So, when was the last time you went on a holiday without a plan? Have you ever woken up in the morning and thought, heck, I'm just going to go to Europe. Come on, honey, let's go. Said no one ever. Because we take months to research the things we want to do and the places we want to go and how much it's going to cost and dream about it and TripAdvisor it. Or with a little glass of wine. It's great fun. But you don't go on a holiday without making a plan. Heck, I don't even go to Woolworths most of the time without a list. But isn't it amazing how many of us, and don't get me wrong, I'm no angel. In my business, there have been times I don't have a budget, but it is amazing how we don't create those plans for our businesses, financial and otherwise. And when you think down to the basics of it, that is truly astounding. It's your livelihood and it's your business owner's livelihood. So if we can plan for these basic things like a trip to Woolworths, I'm pretty sure we should be planning for these big important things in our life. So budgeting is another really important skill. So that was all fine and dandy to have a look at that analysis that we just did on gross profit margin. And that is a little bit about projecting into the future, but it's not actually setting my future milestones. All of that was looking backwards in the rear vision mirror. So the budget is the guy that lets us set those goals and then in real time measure whether we're getting there. So every month having a look at the budget versus actual report and saying, we're way off target. Why do you think that's happening? What are the things that we're doing or we're not doing in our business? And not waiting till we get to the end of 12 months to look back over 12 months. So budgeting is another really imperative service. And there are software products. Anyone used Calxa before? Heard of Calxa? Yep. So Calxa is a software add-on that extracts the historical data from the accounting software and enables you to really easily increase it by percentage or flatten it out or whatever you need to do to create this year's budget. So I think with all that's going on in our industry all of the time, and it wouldn't matter which year we wrote this presentation in, there'd always be things that I could say, heck, isn't there a lot going on? Like we've got Easy Accounting 1, 2, 3, where the Fair Work Ombudsman said, you guys have knowingly done the wrong thing. And so I'm going to find the company, I'm going to find personally the owners of the company, and I'm going to find personally the employee bookkeeper who worked in the tax agent's office, because you were knowingly doing the wrong thing. And this was related to payroll. I keep hearing people saying, oh, it's really annoying me the way people are offshoring their services because I can't compete with that. It's the pricing. My response to that would be, jump on board. If you want to take your practice to the next level and grow things and compete in that space, research your options around offshoring. But there's still plenty of opportunity with business owners who don't want to have a thing to do with that. And therefore you're making decisions about where your practice is focusing. We've got single touch payroll on the go. We've got a lot of noise, and the reality is there's a lot of activity in the cybersecurity space. Then we've got all of these guys that we've got to know about, all those add-on solutions. And I got bored with finding logos, so I could have probably spent another 3 hours putting logos on there. There's a lot to know about that. And as I said, at AAT we're going to start the journey on putting together some resources to help muddle our way through those. So with all of this that's going on, the planning piece becomes even more important, in my opinion. So what I'd like you to do is to take the time to write just 3 goals. Just 3 goals that you might have for yourself. They can be personal, they can be professional, anything you want. For say the next up to 12 months. So just take the time to write down 3 goals. And then I'm going to share an interesting fact with you. So in 1979, Harvard undertook a study of their MBA graduates. And at the beginning of this study, the graduates were asked to write their goals down. And then they caught up with these graduates 10 years later to talk with them and see where things were at. So of that graduate group, only 3% of them actually wrote their goals down. And 13% did have goals, but they were so clever, they could remember their goals, they didn't have to write them down. So they didn't bother to write them down. And 84% of them were just winging it, and they didn't have any goals at all, either thought about or written down. So in the review after the decade, the 13% who had goals that were not written down were earning twice as much as the 84% who had no goals at all. But more astounding was the 3% who wrote their goals down were earning 10 times more than the whole rest of the cohort put together, so the 97%. I find that quite amazing. And I mentioned at the beginning that a lot of this is about the psychology of things and the repositioning of things. The facts is the facts, but the way you put them to yourself and to those around you and to your clients markedly changes the way things are. Have you heard of red car syndrome? I'm going to say to you, oh my goodness, there are so many red cars on the road. And you might never have thought about a red car in your life. And now this afternoon you're going to go, Rochelle, is amazing. There are so many red cars on the road. But that's only because I've made you think about it today. And I've experienced that in my career. I went through a phase where my kids said, what is it that you do, Mum? And at that stage I was doing a whole stack of things, writing technical workshops, doing some bookkeeping, doing some training. You know, it was all over the shop. And it was a bit confusing to say what I did. So I just started saying to my children that I wrote educational resources, which is not exactly what I did do. But within about 6 months, I had a big RTO come and say, Rochelle, would you write our accounting qualifications for us? Well, that was completely left field. I didn't see that coming, but I think the language was going out into the universe, and I probably put myself in situations because of what I was saying that I wouldn't have otherwise been in. So it's just interesting. So Benjamin Franklin, I love his quote, if you fail to plan, you're planning to fail. And I guess failure is a big tough word, it's a bit of a scary word, and it's maybe very harsh. But if you're not planning, if you didn't plan your holiday, you all laughed at me when I said, has anyone thought about going to Europe without a plan? So you're given in your digital show bag a quick start guide to business planning. Because I don't know about you, but I've Googled business planning several times in my life, and they're always scary 60 or 70 page documents that I think, wow, when am I ever going to be able to get that done? And I don't think that's necessary. I think you can start with a simple document that just contains the basics and grow it from there, because it should be a document that evolves, because you evolve and your needs evolve and your clients' needs evolve, etc. So you've got a 2-pager and there's all the different sections with a little bit of a narrative about what you should be thinking about and putting in there, and establishing your goals so that you're earning 10 times more than everybody else in a few years' time. So that's the content of the business plan, which I'm just going to rip through because I've run out of time. But just to make the point that the business plan is the living document and should be one of those things that you pick up quite regularly and think, is that where I am? Is that where I want to be? And make the appropriate changes